I want to emphasize 3 or 4 points. One is that at the end of the 40s, the space for capital had been constricted. Soviet Union, the Chinese Revolution was about to happen. Today, the space is expanding, both in terms of Eastern Europe, phenomenally in China, but even in India, which wasn't much of a space for accumulation, both because of where it was at, but also because the other empires hadn't been fully opened up yet. Second of all, at the end of the 40s and 50s, a major threat for capital was the strength of labor and communist parties in Europe. Since then, over the last quarter of a century, we've had a major defeat for the left, even though there are certain struggles going on. Generally, in the developed countries, there's been a major defeat, which has strengthened capital. At the end of the 40s, the surplus was being, in the beginning of the 50s, the surplus was being transferred to Europe from the United States through the Marshall Plan. Today, the U.S. has access to the surplus from the whole world. At the end of the 50s is when we actually began to hear people being worried about the balance of payments. There was a near panic. It was a major issue in the 60 election of Kennedy when the dollar fell because people were worried about what was going to happen to exchange rates because of the U.S. move away from its surplus and the fear of a deficit. That changed. It didn't change because of economic reasons that people figured out that this didn't matter. It actually was that they learned, I think as Chris was suggesting, they learned over time that the U.S. could actually do this and that everybody would have to live with this because they are integrated into this. The dollar decline, in the mid-'80s, between 85 and 88, the mark went up 65% against the U.S. dollar. The yen went up 86% against the U.S. dollar. If you take particular months, they both actually doubled against the dollar. We're not going to understand decline in terms of, and I think everyone's agreeing on this, by looking in terms of balance of payments or by looking at exchange rates. Empires don't fall because of exchange rates. Now, let me get to David's point. And I just want to make this point, first of all. I think, and I agree with Chris in particular, but I think Scott was saying this too, what we've actually seen through this crisis, and it's a crisis that may go on for a while, I want to raise some questions about it in a second, I think has actually been a confirmation of empire more than anything else. We've seen that they can have balance of payments deficits. We've seen that the dollar can suddenly decline, but it won't reach a panic. We've seen that everybody sees this as their crisis. It isn't just a U.S. crisis. And this is absolutely crucial. This is a radical change. In terms of what David was saying, David hinted at the fact that you can't just look at the level of how many dollars they're holding. There's nothing magic about any particular level. And it could change. I mean, I would go further. I don't see anything that's dysfunctional to the American empire by some diversification out of the dollar. The diversification has happened at a time when there's been a very large increase both in dollars and at the same time buying other things. People haven't been leaving the dollar. They've just been buying other. I don't see a problem with it at 64% held in treasury and it falls to 55%. I don't see that that signals anything in itself. I think that if we think about empire and empires falling in relative terms, or Europe rising in terms of the euro currency, that's linked to empire. It's not about dollars, whether people move to the euro or not. And the fact about Europe is, first of all, there isn't such a thing as Europe in terms of a coherent entity that can manage global capitalism. I think that was just an article in The Economist on China. China knows perfectly well that the EU functions only rarely as a single bloc. There's a limit to how much confidence they're going to have in Europe acting differently. Part of that is also that there isn't the internal, so there isn't the internal cohesion across Europe. It's not clear that any of the European bourgeoisies actually want to take on the responsibility for empire in any way. It's not clear that the class relationship, given the kind of autonomy that the U.S. has. The thing that Europe would be the most worried about today would be people buying the euro. This is what they're worried about right now. The U.S. dollar is falling. It's disadvantaging them, and they're not sure how they're going to handle this in the context of a working class that's been making some wage demands, especially in Germany, because of inflation. So the first thing they'll do, if there's a flood of dollars, of money into the euro, they're going to sell them and they're going to buy dollars. So we can't we can't analyze this in terms of monetary regimes. We have to think of this in terms of the unique kind of empire the American state is at the center of, the kind of penetration and integration that has occurred that is unique, and what that means. Now, the question I have, and it's a question, I don't know what the answer to it is. Leo and I were talking about this over the last few days. Are we seeing a new kind of crisis? Not in the sense that it's going to mean collapse, but new in the sense that I don't know if we've had a recession in the U.S. that we could really say was financially driven. There were recessions that were caused by something else. This isn't really caused by the housing thing. A problem in one sector doesn't cause this kind of a deep problem. We've always had downturns, and then it gets expressed financially, but I don't know that we've seen one that we could really locate in the financial sector. And I think, so I'm just curious about if people think that's true and what it means, and if it also means that you can't get out of it simply by lowering interest rates or adding liquidity because of the nature of the crisis, and therefore you have to depend on fiscal policy. And this is going to last for at least a few years. I don't mean the recession, but we'll have slow growth for a few years. And there's a turn to fiscal policy. What is that going to mean in terms of how we think about neoliberalism? And will it be a fiscal policy, because it isn't being led by the working class at all, they've been completely marginalized. Will it be a fiscal policy that's completely oriented, completely, to supporting the accumulation of capital, which in the context of the United States might mean massive investment in infrastructure, which has been lacking for an awfully long time and would help in the process of accumulation. So those are just questions.
Great, thank you very much.